Hello everyone. Today is Thursday, July 9th, 11:38 a.m. in Kyiv. And now we are going to look at a single chart together. This is a review from my private Telegram channel. The chart is of the S&P 500 index, specifically the futures and mini futures on the weekly candles. These will be a chart with my indicators. And now let's start the analysis using arrows. I've marked the areas where, look here, we have a cluster of signals indicating a decline. That is, there are many of them here. They're colorful, different, labeled in some way. It doesn't even matter what they're called. After that, some kind of decline started. Here, look, here's one area where signals are clustered and a second one with even more signals added here. And in the end, the decline went even lower than the area where the initial signals appeared. So it ended up somewhere in this area. Here, take a look. There's a dense cluster. I've marked it with an arrow. And it came somewhere here to the target levels. Let me just remove the magnet now because it's shifting my drawing tool. It came right here. Look here. Here we had an initial cluster, but it was very modest. There were actually only two signals here. Here there were a bit more and just a little bit more over here. So after such a large cluster, there wasn't a significant decline, although there was some. But in the end, the S&P 500 index price went significantly lower than even the initial point. So we even worked through the initial signals for a decline with a more deep correction than the one that happened right after those signals. So there was a kind of combination here. At the same time, there was basically not a single signal for growth. There were take signals which appeared with a question mark, suggesting that perhaps the market had reversed and would continue to grow for now. In other words, the decline is cancelled. And right here, this is where the first signals appeared, indicating the possibility of growth. And finally, look here. Here is a group of signals. Well, I'll group them together a bit. And right here with a red rectangle. I've highlighted a lot of signals. There are just so many of them, right? And what does that tell us? It suggests that most likely we will work it out. And these signals in the oval, yes, in black and in the red rectangle, with a move below. The values of this correction that occurred. Now let's see whether it was significant or insignificant. And now let's look at the size of the correction. Look, right here. I'm not even going to... Well, let's turn on magnet just in case, so at least we have some kind of maximum. Sometimes you can't see them here because of the abundance of indicators. All right, let's set it here. Let's look for a point here, some point. Here's a drop of 35%. So this group of signals ultimately led to a significant drop of 35%. Here we can calculate it in two ways. First, from the point of the maximum, the drop occurred, somewhere around 27%. Or we can take it from another maximum point. Here are the very first signals where they appeared here. We can't be sure, can we? We can't be certain that this isn't just an intermediate point. That is, there might be several more such clusters before we actually experience a global drop. So, from these initial signals, which were clearly fewer than there are now, we dropped, let me try to catch this minimum, by 15%. So even from the initial signals, it was a 15% drop. Here, it seemed like there were a ton of signals, but the drop was only 11%. Let's take a look here. First, from the very top point, down to the final bottom, not just this local correction here, but the final one after which the trend reversed. A rise to new all-time highs followed, very strong and without any pullbacks. So the drop was 9.5%. But if we take it from the top point, and it's quite possible that we're currently at such a point, the drop amounted to 21%. So look, here I removed a small correction of 15%. And we end up with 35%, 27%, 11%, and 21%. And finally, here's our situation. If we talk about the very first two signals, I call them O and super warning. So these signals basically didn't play out at all, because there was just one red candle and that's it. We didn't go any lower. So most likely we will go below the value of 6,264 points. And here we have the pink target, although in principle it's already been reached. We touch this zone. That's it. Well, let's take it from a higher point. There was a bigger cluster here. That's why I put a red arrow here. Where did we go? Here's the lowest point. That's it. 6.7% from the first cluster of signals. Here we got 15. I deleted it, if you remember. And here it turned out to be 6.7. We even dropped to 11 here. So essentially, it's almost twice as strong. This suggests that a deeper correction than the lows that were around 6,360 points is possible. And most likely, it will happen. But let's keep imagining things. Not 15, but 12%. Let's draw it. Roughly like here. Here from the first signals it was 15. And here it's not even 12, but 10.8. Let's draw 10.8. That's about 6,000 points. And I've said this many times already. On the daily candles, we have a downside target. It's strong, it's marked in yellow. It's located in the range from 6,100 to 5,900 points. We fall exactly into this range. Here, I'm moving the cursor, bringing it to 6,060 points. And finally, you can now see that there are a lot of signals for a decline. That is, all in one area. And the correction from the maximum is from this area. Now, let's try to use the magnet tool to snap to some candles maximum. And if we go to the minimum, it was only 5.2%. What does this tell us? This tells us that even if we see some kind of step up, yes, another move upward, I don't think it will go that high. Well, even in this scenario, I got about 8,500 points. This is a forecast. I can't remember if it was Goldman Sachs or Morgan Stanley, so what did they say? By the middle of next year, the S&P 500 could rise to around 8,500. I'm not sure it can rise that high. I don't rule it out, but I would put it this way. The odds are 6-4 or 7-3. There's a 70% chance it won't rise, but will go into a deep correction. It won't rise to 8,500. And there's a 30-40% chance that it will first go up there, to that area, to 8,500 points, and then it will go into a correction, which in any case will most likely bring us to the 5,900 to 6,100 range. And finally, I'll remove everything that's drawn and marked here. This little rectangle here is what we discussed with you. Here are the monthly candles. Here's the bottom right corner. Look, here's the yellow target. It's highlighted with an arrow. 5,900, 6,000, about 0.80 there. So here we have a potential divergence with this red line, the overbought and oversold indicator. The formal decline hasn't started yet. Why? Because there is no break in this indicator. But when it does start, it will last for several months. Yes, in waves with bounces, pullbacks, and so on. But here and now, in my opinion, you can consider shorting the S&P 500 index, understanding that it could go somewhere to the 8,000 to 8,500 range. Still, well, I don't rule out that scenario. It could reach that level. So this is your risk zone. If you trade without a stop, you need to calculate your leverage and your risks so that you don't get liquidated at 8,000 to 8,500. But honestly, I don't really see it that way. There aren't any particular reasons for such strong growth given this huge number of signals. Now, I also forgot to show you one more thing. Here, I've opened the weekly chart again. Look, we haven't checked the overbought and oversold indicator yet. Look, what happened right here? There was a decline from the overbought area approaching oversold. Clearly below the midpoint. If we draw the midpoint, we clearly went below it. The next red arrow is from the overbought area. Look, here is oversold, here is oversold, and here is oversold again. So we entered in several waves step by step and found our minimum in the green zone, which indicates that a potential reversal could happen here. It could happen earlier, as you can see right here in March 2020, but what we're analyzing is what this indicator tells us. Look here, from the overbought area, the price moved into the oversold area. Let's look here. Here we had an overbought condition. We didn't reach the oversold area. We stopped halfway between the indicator's neutral position and oversold, at the zone where oversold begins. Then we had a rebound to new highs. Let me draw the lines like this. This is the line of the highs. At the same time, the indicator shows lower highs than before. This is a divergence. Here we can draw it. It's slipping a bit for me. The cursor is grabbing the wrong thing. Here, the line is sloping downward. The index prices are trending upward. And we move into a correction, almost reaching the oversold zone. And now, attention, here's a question. Look, Right here, yes, we entered the oversold zone, here it was, but at the same time, the correction amounted to, how much did we get there? Well, we looked at it together, 6% or 10%, it doesn't matter, right? But now we are in the overbought zone and even in a neutral position according to this indicator. Now I pressed something wrong, wait, even in a neutral position. Here, there's no sign of it, and our target zone when entering this area, with so many signals for a decline, is somewhere around here, well, at least here. Well, based on the principle of, these kinds of bounces. So we still have room to decline on the weekly candles according to this indicator. And according to this group of signals, there is still room to fall. That's why I don't see any reasons for the stock market to grow. And this in turn poses risks for cryptocurrencies. This doesn't mean that we will start falling right now, this very second. No, we could start a decline, a serious drop, in an hour, in 4 hours, in 10 hours, in 10 days, in 10 weeks. Yes, I don't know when this will happen, but I can see from the charts my tools indicate that going long is absolutely out of the question. The S&P 500 index, well, it's just absolutely not allowed. It's contraindicated. The doctor has forbidden it. And you can take a cautious short position, but with the understanding that if the index price rises to 8,500, that's where you'll add to your short, rather than thinking, oh no, the liquidation price is getting close. Don't be greedy, have patience, have self-control, and you will get your result. The index is in the 5,900 to 6,100 range, and I think that's the minimum. We will wait after that for exactly the same kind of reversal, when the indicator on the monthly candles moves from this zone to here. Will it make a turn somewhere around here? On this very turn. A turn from below upwards will be a sign of a market reversal, but so far we haven't even had a proper downward turn on the monthly candles. Let me show you this indicator once again specifically. Look, here was a turn, there was some minor correction. Yes, we dropped to around 6,350, and now we are in the overbought zone on the monthly candles. Bottom right corner, if you can't follow my mouse, it's pale yellow. And when this turn happens, our target zone should be somewhere around here, at the very least right here. And we will have to wait, right in this zone, for a turn from below upwards. And only then will we consider buying or entering long positions. No longs for now. I hope this video was clear, and I'm sure this video was extremely useful. Regardless of whether you're a trader or an investor, hugs and kisses to everyone. Goodbye.